Hi everyone. Today we will be discussing about the SGB bonds, which are sovereign gold bonds which are issued by Reserve Bank of India on behalf of Government of India. These bonds are secure and beneficial investment opportunity for those looking to diverse their portfolio. So let's have an understanding definition and features of SGB bonds. First one, it's a secure investment. It's a way for individuals to invest in gold without the need for physical storage of gold. They are backed by government of India, ensuring reliability. So next one is denomination flexibility. Investors are able to purchase these SGB bonds in denomination as low as 1 gram of gold. Suppose an example, take an example. If you want to buy 14 grams of gold bond, so you can buy 14 grams of worth gold bond, or else 1 gram, at least minimum 1 gram of gold worth bond you can buy. The interest earning. These SGB bonds, apart from capital gain, these bonds will provide you additional fixed interest on investment amount. Like suppose recent gold bonds are having 2.5% interest. That means if you have invested 1 lakh, so 2.5% of 1 lakh will be coming for you in annually. Let's know the benefits of investing in SGB bonds. First is gold price protection. Investing in SGB bond offers protection against the fluctuations in the price of gold. Take an example, you are buying a 10 grams gold bond now, and after 5 years or 6 years or 8 years, if you want to buy same amount of gold, at that time price of gold will be different. But you can buy 10 grams of gold with the price of 5 years back when you bought a gold bond. So this is how you are able to protect the gold price. Let's understand what are the capital gain tax exemptions in this. Take an example, you bought gold bond for 1 lakh, and after 8 years the gold bond worth is 1.5 lakh. So 50,000 is the capital gain. So if you're keeping the gold bond until your maturity, the capital gain will not have any tax. So it is tax exempted. So it will be charged 0% tax. So entire 50,000 profit is yours. That's the benefit of SGB bonds. Terms and condition is if you're keeping until the maturity. Liquidity. SGB bonds can be traded on stock exchanges, providing liquidity to investors who may need to sell their investment before the maturity. So now know how to invest in SGB bonds. Every individuals, HUFs, trust, universities, and charitable institutions are eligible to invest in SGB bonds. Application process. These bonds can be applied through commercial banks or post office as well as from stock exchanges. Maturity and redemptions. These SGB bonds are generally for 8 years period. Suppose if you are investing now, after 8 years it will automatically mature. The maturity time period is 8 years. You can redeem your bonds after fifth year. After completion of 5 years until the eighth year, completion of eighth year, you can redeem your bonds. But if you are redeeming in between fifth year to eighth year, capital gain tax exemption will be there. Capital gain taxes will be there. Or the capital gain tax exemption is only available when you are withdrawing after the maturity. This is the main point and crucial point. So now let us understand the risk associated with SGB bonds. The price volatility of a gold. Normally, every 5 years, the gold price is increasing with a 50%. Interest rate risk. SGB bonds are subject to interest rate risk as a changes in the prevailing interest rate can influence the attractiveness of a fixed interest offered by the government. Early redemption penalty. As I already said, investor opting for premature redemption may subject to penalties affecting the overall returns on the investor. Penalties are also there and taxes will also be there for the capital gain taxes. So these all comes under in the reduction in overall profits. So now let's compare the SGB bonds with other investment options. First one is the gold ETF. Compared to the gold ETF, SGB bonds provide the additional benefits of earning fixed interest over the above potential appreciation in the price of gold. Second one is physical gold. Unlike the physical gold, investing in SGB bonds eliminate the need for storage and security concern. Third, growth schemes. When compared to the growth oriented investment schemes, SGB bonds offer a unique combination of stability, gold price protection, and a fixed interest earning. So these are the three comparison of SGB bonds with other investment options. So now let's have a conclusion and key takeaways. Diversification. Investing in SGB bonds provides investors with a valuable opportunity to diversify their portfolio. Government backing. These bonds are backed by Government of India, makes the SGB bonds a trusted and secure investment option. Tax benefit. These bonds also provide us tax benefits if you're holding the bonds until your maturity period of 8 years. Entire capital gains is tax free. Thank you, and this is all about the SGB bonds. We will meet in next video with another interesting topic. Bye bye.